What is going on, everybody? Welcome back to Trading Learning 101. Today I want to talk about the VIX. If you guys watched my market recaps, you guys may have heard me mention the VIX and asked yourself, well, what is the VIX? The VIX is a very important tool that I use every single day. This past week, just by keeping an eye on the VIX, I was able to capitalize on it. And what the VIX is a volatility index. You may have heard traders or investors call it the fear gauge or the fear index. I'm going to show you guys what I look for and the types of ways you could use it to your advantage as a day trader. The more knowledge that you know about the stock market and the markets, the better edge that you have. So fill that brain of yours with knowledge, study your butt off, because there is just so much to learn about the stock market, and this is just one little area that I'm showing you guys in this video in the big huge world of finance and the stock market. So I got Investopedia here with the definition of the VIX. So what is the VIX? It's a volatility index. It was created by the Chicago Board Options Exchange, CBOE, the Volatility Index, or VIX. It's a real-time market index that represents the market's expectation of 30-day forward-looking volatility derived from the price inputs of the S&P 500 index options. It provides a measure of market risk and investors' sentiment. It is also known by other names like fear gauge, fear index. Investors' research analysis and portfolio managers look to the VIX as a value to measure market risk, fear and stress before the market investment decisions. There are different types of fear gauges out there. You got the VIX for the S&P 500. You got OVX that measures crude oil. The Russell 2000 has a fear index. There are many fear indexes out there, and I'm going to show you guys different fear gauges out there and what to look for when looking at these fear indexes. So right here, I have an intraday chart of one of the fear indexes, the VIX, and that is money sign VIX. If you're trying to look it up on your trading platform or on your phone by just typing in VIX, it's not going to pop up. It's an index, so you have to put the money sign VIX. And it pretty much goes, the higher the VIX is, the more fear is in the market. This is just looking at the intraday chart here. When I'm looking at the VIX, I always try to see where it's at. If it's below 16, that's the price area that I look for. If it's below 16, that means, okay, the market is very chill and mellow. There's no fear going on. It's pretty much normal. But when the VIX jumps up to 16 and over 16, that's when panic, fear sets into the market. And you can see right here on July 31st of 2019, it was hanging around 14 right here. And then we got this huge spike right here to 1650. That's a shot of fear right there. And then it retraced back down. And then the next day it was hanging around that same level, 14. And then it shoots even higher up to 1950. And then the next day after that, it held above 16. And this was just jumping around from 18 to 20, back down to 18, up to 19. And if you look at the SPY compared to those days, so if I bring up two charts right here, on the left side we got the SPY, on the right side we got the VIX, the Volatility Index. It also helps if you're keeping track of all the major indexes out there to know the price levels that they're at the NASDAQ, Dow Jones, S&P 500. The past few weeks with the SPY, it's been struggling to hold above 300, all right here. And then you could see this big sharp decline right here. And I'll zoom in on this a little bit. Right here, this big sell-off below 300 all the way down to 295. This happened on July 31st at around 14:25, 1:25 p.m. And if I zoom in here on the VIX, this big first spike right here, if I click on that, this big spike on the VIX also happened on July 31st at 14:43 p.m., 1:43 p.m. So you see this big sell-off here on the SPY, and you also got a spike on the VIX that just showed you right here that fear entered into the market, and you got a big spike on the VIX. So what does that tell me? That something's going on with the major indexes, and I need to pay attention to the market and the inverse ETFs. When the SPY got its big sell down below 300, down to 295, this came right back up and crossed over 300 here, and you can see it went sideways. With the VIX, it came right back down, nice little pop again, and then right back down to where it came from. Right here and right here. And then the next day when it had this big sell-off right here, you could see it really picked up right here. So what I like to look for with the VIX, like I said, 16, I try to keep an eye on that level with the VIX. If the VIX is below 16, everything's cool and fine. If the VIX is at or near or above 16, that means there's fear in the market, and I need to pay attention to the SPY and all the ETFs that move with the SPY. ETFs that move with the SPY, for example, TVIX is just one of them. And these are just more opportunities out there for us as traders to make money and trade. When there's volatility and fear in the markets, and if the market's crashing or having a correction, you can turn towards the TVIX, UVXY, VXX, and there's a few others out there for trading opportunities. We got TVIX, UVXY is another one, VXX is another one, VIXY is another one, SVXY is a bearish one. There's so many out there. So many. So it's up to you guys to find out which ones you guys want to track and follow and compare with the SPY and the VIX. Me personally, I just like to follow the TVIX and UVXY. Those are my two favorite ones to follow and watch. With my number one being the TVIX. It's a ×2 bullish ETF. So you have ×1, ×2, and ×3. So what a ×1, ×2, and ×3 is, it's how more volatile it is. A ×2 is going to be more volatile than a ×1. A ×3 is the most volatile. It's going to move more than a ×2 and ×1. So what it is, like the TVIX is a ×2 ETF, it's going to move 2 times more than what the SPY is doing. It's all measured on volatility, and you could pick which one you want based on the types of risk that you like to take. If you like ETFs that move really fast, then look for ×3 ETFs. If you like ETFs that move very slow, then use a ×1 ETF. It's just such a big world and a big grasp on following this, but once you learn it and pick it up, you'll never forget it. But I do gotta mention with these inverse ETFs, they're not buy and hold ETFs. All they are day trading vehicles when opportunity arises in the markets to trade for a profit, pretty much. That's it. You could, if you wanted, to swing trade these ETFs. Me personally, I just like to day trade it on the day where there's opportunity and fear in the markets. So we know the VIX is up and above 16. The SPY is selling off. I'll pull up the TVIX, and what I do is I go through, I plot all of my lines, support, resistance, trend lines on the SPY, and I'll also do it on the TVIX. And I'll just compare the two and just keep eyes on the two. That's it. And it's actually pretty fun as well. That's what I think. Analyzing both of them, comparing the two, breaking them both down, seeing which one is showing strength, which one is showing weakness. And I'm just making this video, like I said, to show you guys and open the door for you. It's up to you to learn more about this stuff. I will leave links in the description to all the information that you guys can read and dig into. But I'm just showing you guys another trading opportunity that's out there. So just with the SPY here, to show you an example, the sell-off down right here from 12:40 p.m. down to 13:20 p.m. sells down and then consolidates. With the TVIX right at 12:30, gets a grind up, just like when the SPY sold off, and then consolidates right here up until 1400 1 p.m. right there. And then the SPY broke up and above from that range. The TVIX, you could see it broke down from that range and then went into another quick range right here. The SPY went into a range, and then the SPY broke to the upside as the TVIX broke to the downside right there. I just showed you and compared the two right here to show you how they move. Look at these inverse ETFs as if they're like a mirror of what they're doing. And this is just with the SPY. There are inverse ETFs with gold, natural gas, oil, semiconductors, technology, so many ETFs out there. And we'll take a look at the UVXY. Same thing with the SPY. This sell off, this grind up, consolidated, pops up, sells down, consolidates, the SPY rips up, the UVXY sells down. Even look and compare them on different time frames. And also what I do as well is I'll get a line chart out and I'll compare all the indexes. For the red line right here is the Dow Jones. The blue line is the NASDAQ composition. The white line is the semiconductor. The green line is the Russell 2000. The yellow line is the S&P 500. And I just like to have this up during the day just to compare all the indexes and see how they're all moving. It better helps with me to visually see this when analyzing the TVIX and all of that. So this just comes into play as well, having multiple monitors up. You need at least, if you're really into trading and you want to be a day trader, you need more than one monitor because there's just so much going on and you just got to have so many charts up. I would say you need to have at least 3 monitors at least. I have personally 4 monitors, but I have 4 monitors because I have different things that I like to look at. Going back to what I say, the more you know and the more you study, the more doors you're going to open up in the markets and just see opportunities everywhere. This was just another trading example I showed you guys. I've made multiple related videos to inverse ETFs and ETFs. I will leave links to all of those videos in the description down below. I think I made like 2 other ones. Every single time something happened in the markets, I've always made a video on the inverse ETF. So you can actually go back and see, because I have it time stamped whenever major moves happened in the markets. And then this is looking at the VIX on the daily chart, just so you guys can see the measurement of the VIX and the fear gauge. This past week, it got up and above the 16 level I was talking about. And even if you go back on this, and if you guys remember the economic crash that happened in 2008 and 2009, that happened right in this area right here. And if we zoom in on it, the volatility index, the VIX, went from 19 all the way up to a high of 90. That's crazy and insane. It just goes to show you how wild it was based on the measurement here on the fear gauge, the VIX. And if we zoom back out, since that economic crash in 2008, when it topped out at 90, we haven't come close back up to that level. And you can see multiple times it's topped out here at around 50 with these long wicks all right here. Look at it on the weekly chart, and also look on the monthly chart as well, where every candle is 1 month. Right here is when the big crash happened back in 2008. And since then, we've just had some big, nice pullbacks and corrections with these big spikes all right here in 2010, 2011, 2015, 2018, and 2019. And like I said, guys, I'll leave all kinds of cool links down in the description of this video. Feel free to check it out, build up that knowledge, learn more about it. None of anything I've said in this video is financial advice, or don't take it as financial advice, because I'm not a financial advisor. Do your own due diligence, learn about this stuff. I just presented it to you guys to open a door. I hope you guys enjoyed the video. Check out the other videos I've made on ETFs and inverse ETFs. And until next time, guys, have that patience, have that discipline, and study, study, study. Later, everybody.
The most valuable commodity I know of is information. Wouldn't you